here today. Lot going on, so I appreciate all of you making time for this work, your attention on this work. I know there's a lot of action out there in this world, so I thought it could be nice to just drop your name in the chat. For Eric and Josh's benefit, maybe put the county that you're in. And then maybe just say one thing that's making you happy recently. So while you do that, I'll go through our housekeeping. Friendly reminder that we're back to the fourth Wednesday of the month for our meetings. I know we're on the third Wednesday of the month for the holiday season in the last quarter of 2025. But we're back in our groove of the fourth Wednesday of the month. Thanks to those of you who have submitted your quarterly report. Those are due on January 31st. So please get those in. As always, let me know if you have questions about the formatting, if you want to add another column, change things up. We're very willing to make these reports flexible and work for you. And then, yep, the same old reminder, but it's going to increase in its urgency as we are in our last year of the contract. Please submit your invoices so we can pay you. Yeah, we have a goal of being at least 75% invoiced by September. That will really take the pressure off those last months of the year and make sure you guys get paid for all the hard work that you are doing. So, all right. Anything you guys want to bring up? We'll get into our CDA updates on our tax credit review after we hear from the Colorado Department of Revenue, Josh and Eric. But any comments that anyone wants to make before we get started? Okay, great. Well, as requested in our December meeting, you guys had a lot of questions about denial letters and tax filing process. As you know, it's very difficult for us to answer those questions. One, because we're legally not allowed to. And two, because we just don't really even know the answer. So thanks to you guys. Yeah, we reached out to Josh, who and asked if they would come. They immediately said yes. So we're really appreciative for these representatives here. I'm gonna pass it over to you two. Feel free to tell us more about the kind of work you do at the Department of Revenue, and then we can just open it up for questions. I'll take notes in our agenda here, and we'll go from there.
All right, well, thanks. Good morning. I'll go first, and just a couple of housekeeping details from my perspective. I'm fighting a fairly nasty head cold right now, so if I go off of camera or mute myself, it's because I probably have to sneeze or do something else to contend with that. So appreciate just the understanding there. My name is Eric Myers. I'm the director of the Taxpayer Service Division. Many things that we do, we essentially process all of our income tax returns, well, really all tax returns, issue most of the bills and refunds coming off of those tax returns. We have a call center and an e-services team and an education and training team that report up to me. And definitely want to hear what the issues are with this credit and how we are administering it. But before we get into that level of detail, I'll allow Josh to introduce himself.
Thanks, Eric. My name's Josh Penz. I'm the Director of Tax Policy for the department. And so my team does a lot of the legislative work, we handle all the administrative rules and guidance publications, and we do a lot of the form design work here for the department.
Great. Thank you for that introduction. So, yeah, who wants to kick it off with some questions?
Morning. Thank you, gentlemen, for joining us. I'm happy to jump in. So I am working in Pueblo County, and I have helped a number of businesses receive a tax credit through the CDA process. And then when they submit the tax credit along with their tax return, most recently for, I guess, what would that be? 2024 taxes. The tax credit is not being applied and they're getting a rejection letter. The rejection letter basically indicates that there's a missing link between the business, which is an LLC, which eventually turns out K1s, to the individual who's the owner of the business who's filing their individual tax return. So the link that I'm seeing right now is that LLCs get the tax credit, but individual taxpayers file the tax return. And so something is not lining up. This has happened with every business that I have supported in getting a tax credit. So there have been multiple tax credits that have been issued and multiple denials. And they've responded to the denial letter. In fact, I have permission from one business to show the denial letter if that's useful for this call and for you to see exactly what I'm talking about. Although I know you can't talk about individual people's tax returns. But in my mind, that's the missing link, that the business is named on the tax credit and then the individual taxpayer is submitting the tax return. So maybe I'm right, maybe I'm wrong. Basically, my goal is to understand how to help the people of the business who make the money and pay the bills benefit from the tax credit that their business is receiving. And I've had zero success so far, beside being successful in receiving tax credits. So yeah, that's my number one question for y'all.
I think that's probably going to be the question that everyone has, and I think that is um, I don't want to call it a structural issue with how the credit is certified by the Department of Agriculture and how we ingest the information at the Department of Revenue, but I think that's the core problem, that the entity or the partnership is in receipt of the certification of the credit. That information comes over to us, and we program our systems to look at those credit certifications. Partners in that partnership are not listed in that credit certification. So it essentially is creating a null record for us. And because this is all automated, we will deny that credit until we get the K1 information or the 106K coming from the partner to substantiate it. So Josh and I were chatting a little bit before about how we might try to resolve that fundamental mismatch. And we have some ideas. Those ideas I don't think we could put in practice until the current tax year, 2026. So in other words, I don't see a way that we can easily change paths or change our direction for the 2025 tax year that we're starting to process tax returns for right now, simply because things have been programmed, and it would require us to pivot and change a lot of direction and put a lot of programming resources on a population that, while I understand is 100% of what we're talking about here, is a very, very small subset of taxpayers when we're dealing with 3.4 million tax returns per year. So I know that's probably cold comfort, but I think we understand the issue and are interested in trying to figure out a path forward. I'll say that the good news is these are new credits and we have to sort of learn, I think, from our mistakes, and this is certainly a mistake. But I don't know if Josh, if you have anything more you want to add to that.
Yeah, I'll add just a couple of things on that point specifically. We've seen pretty unprecedented growth in the credit inventory over the last 5 or 6 years. We've gone from about 40 income tax credits to over 80 income tax credits now. And almost all of that growth is in this refundable credit category. And so in some respects, as Eric said, we're sort of still learning how to best manage that inventory. That's happening also at a time where the taxation of pass-through entities in recent years has gotten much more complex, and the entities themselves have gotten much more complex. We're now seeing where in tiered partnership structures, the average number of tiers in a tiered partnership structure is 6 tiers. So there may be 6 levels between the entity that earned a tax credit and the ultimate tax-paying partner. And so, we're still trying to get good at tracing all of that as it moves through that 6-tier structure. LLCs present another difficulty that we may just need to talk with Mickey and her team about, because in some cases LLCs are partnerships, and we need to figure out how we trace through those credits through that structure. In other cases, they're what we call disregarded entities, where they are just a single member who's not regarded as a separate taxpayer for income tax purposes. And in those cases, I don't know how we're handling those now, but it may be, it's probably more appropriate in those cases if we do give the certificate to the single member and issue it in the name and identifying number of the single member, because the single member is the taxpayer. For income tax purposes, there's no difference between the LLC and the single member. So if that's not what's happening now, like I said, Mickey, you and I can kind of talk through that a little bit more. But if it is credits flowing through LLCs or other forms of partnerships, S corporations, same thing, where there's a K1 in the middle there. It's more a matter of us getting better at how do we look at that K1 and make sure that we can make that link between the taxpayer who earned the credit and the ultimate tax-paying person who's going to claim the credit on their return.
Yeah, I think
So,
the
go
cases
ahead.
we're talking about are disregarded entities, single member owners. At least in my situation, I'm working with very small businesses. They've created the LLC, but it's their business, right? So I think that's exactly what you mentioned. And I had asked in the past if an individual taxpayer could apply, knowing that sole proprietors end up taking on the responsibility of taxes. And what I was told was that the tax credit is specific to businesses. So businesses cannot, or individuals cannot apply as the individual taxpayer. But maybe if they apply as a DBA and they use the tax ID of their social security number rather than their EIN, that would kind of create the link to be a little more smooth. So that makes a lot of sense. I do have, obviously other people have questions too, but I also have a question around what we do when we get the denial. So maybe we can continue on this exploratory path for a bit, and then when the moment's right, I want to ask about taking action on the denial.
Yeah, and again, I think it's maybe something that Mickey and I can talk about offline to try to ferret out, how to deal with disregarded entities. These kinds of partnerships that we have with agencies like CDA, and I think we're working with just about every principal department in the state on one credit or another. They've been great because they give us access to this expertise that they have. I don't know anything about food distribution or agriculture or sustainable farming practices or aviation fuel, but these folks do, and it's great to get access to their expertise. But they're not tax administrators, and so little nuances like disregarded entities just takes us time to iron out. And so I do think that if the business is operating through an LLC as a disregarded entity, it's appropriate for that entity to be the applicant for the credit. And what we need to just do is make sure that we're getting the certificate issued in the correct name in those cases, correct name and identifying number in those cases. And I think, Mickey, that's an action item, we can take kind of offline to talk through a little bit more if you're open to that.
Yeah, I would love, I mean, if there's any more information we can collect on the application, obviously we'll be talking with you about how to frame those questions
Sure.
and their corresponding conditional questions, like are you an LLC? Are you a disregarded entity? Um, we can totally put that into the application and then
Yep.
get that
Yep.
up front. Okay, well, just to summarize what Monique asked, and this was also asked by Hunter, um, so if it is an LLC that's a disregarded entity, aka it's the same, it's basically the same individual, they're not taxed separately, they can apply with their social security number as an individual.
Yeah, I mean, I still think, again, I'm going back to, I think that the LLC is the appropriate entity to apply. We
Mhm.
just have to iron out how to issue that certificate, because the LLC in that case isn't a taxpayer. The owner is the taxpayer. And so, I think there's a solution in there, like you say, where we ask some questions to get at that. And ultimately, the certificate that you'll issue will be to that single member rather than to the LLC. And that will smooth out some of these, because in those cases, the LLC, because it's disregarded, isn't filing its own income tax return. And so there's no K1 for it to provide. It's not filing a 106. It's not filing a 1065. So there's no K1 for it to provide the member. The member just includes all of that in their individual income tax, or in some cases corporate, if they're a corporation, that's the single member. And so that's the problem, is that there is no way for the LLC to communicate, I've passed this credit through, because it didn't really pass through. It never really left altogether in terms of, in the eyes of the income tax code, because, business entities like to make things as complex as possible. And so now we have a zillion different kinds of entities, and we let them kind of file however they want. So that's a little bit of insight into how tax administration works these days. It's complex.
Definitely. Let's turn it over to Michelle. You've got a question?
No, I just wanted to note Chelsea had dropped one in the chat.
Oh,
And
cool.
I'm happy to read it out if you want me to, Mickey, or I
Yeah,
didn't know
go
if
for
you.
it.
Okay. And just clarifying, Josh, are you saying if our applicant is an LLC that is a single member owner, under the initial tax credit should be awarded under their personal name, not the business name?
The key is, if the LLC is what we call a disregarded entity, it doesn't elect to file as a separate entity from its owner, then yes, I think the solution there is that the certificate should be issued in the name and identifying number of the single member, and not in the name and identifying number of the LLC.
Okay, got another question from Chelsea. For partnership LLCs, is there any additional paperwork they can submit with their initial filing to prove their link so they don't get the initial denial?
And I think I'm assuming you mean the tax return when you submit the tax return. And I indicated that this is a check that we automate in our system. And so if there were a human in the loop on that initial check, then I would say perhaps that would help. But because this is a system doing a systematic check, it's not going to know to look at, and it can't read attachments anyway. So it really is keying off of the file that CDA provides us. But I think, these are things that we need to iron out for the future of the administration of it.
I do think one key there is to make sure that in that case, the partners have the K1s from the partnership, whether that partnership is a partnership or an LLC or an S corporation, which is another kind of pass-through entity. It's important to make sure that they're not filing ahead of getting those K1s, because we won't have them either in that case. But to Eric's point, it's getting stuck at the moment in this automated check, that isn't looking in all the places we need it to look.
Would it be possible to include on the tax credit certificate whether or not the entity will submit a K-1? So for example, right now it just says the business name. Is it possible to just include also on the certificate so that when it is denied and then a human does review the tax credit certificate, which they're often resubmitting, that's the piece of paper they're resubmitting in the denial letter because that's what's being asked. It can say like, yes, Monique's Meat Market is filing under this K-1 taxpayer name or something like that, so that on the certificate itself, it will give you an anticipation of what you should see coming in. Because I know that, just again, to speak on this example, we won't name names, but they responded to the denial with the tax credit certificate, but then nothing happened once again because there wasn't that link. And so is there a way that the tax credit certificate could indicate that there will be a link to a human taxpayer? And that way, when someone does look at it, it'll just speed up the connection a little bit.
I think that's something worth talking about between us and CDA, seeing if that's something that they can collect and put on the certificate.
Yeah.
I'm just thinking in the back of my mind, Mickey, like a very simple question that says, which human, maybe we don't use the word human, which taxpayer will eventually pay the taxes due for this business? And then it's that human's name, right? Whether it's a disregarded entity or a K-1 or whatever, but something about getting to the person behind the bill that would kind of create the link.
I mean, I'll say in other credit cases, we have in some cases had the agency actually just certify to the ultimate partner. That has some drawbacks to it, and we're not ruling that out as a possibility, but that has some drawbacks to it. Number one, it's not always clear in the statute that that's allowable, but also, again, with these multi-tier entities, that gets really tricky. And maybe that's not a problem in this particular credit with this particular population, but again, we've got 80 credits that we've got to kind of do the same way. And so that's a lot to put on the agencies that are working with us to say, well, you got to trace this through 6 tiers worth of partners and get to the ultimate indirect partner. Sometimes the partnerships themselves don't know all the way up the chain who all the indirect partners are. And so it's a symptom of a bigger problem with just the way that partnership taxation works and the complexity that we're seeing in that structure these days.
Josh, would you say that this kind of issue with, between disregarded entities or figuring out whose tax goes where is common with a lot of these credits? Or is this really only on this one has it become a big issue?
No, I think this is an issue with several credits that we're facing now. And so that's why it's a problem that we're working because it's not just for this credit. It seems like it may be more common for this credit to use disregarded entities, and so that piece is maybe something we can solve for. But certainly partnerships are operating all different kinds of businesses and claiming all different kinds of credits, and so this isn't unique to this.
Who else has got questions? I do want to come back to this one. What's the best course of action? What's the fastest way to support someone when they do get a denial letter? But anything else on this topic with the disregarded entity?
I have a question, Nikki.
Go ahead.
So many of the applicants are have just received their 2024 tax credits for the 2024 filing year, and so need to file an amended return. Similarly, a lot of the tax credit certificates issued during 2026 will be applied to 2025 returns. And so if the conversations with CDA and the Department of Revenue result in like some change in how we're issuing the tax credits, how CDA is issuing the tax credits, could CDA potentially reissue the 2024 tax credits, listing the appropriate entity for these disregarded entities? And then when they file their amended return under their individual name with this tax credit that lists their individual name, could that potentially be processed in a 2024 return, or is the book kind of closed on how that works?
Yeah.
Josh, let me jump in first. I think the book is more or less closed. I mean, I think we have to evaluate at the Department of Revenue how we allocate our programming resources and how we utilize that to change, operations in the system. We are still sort of putting a button on, or tying a bow on the 2025 tax year rules. But those will be done here in the next, week or so. So really what we need to do is look at changes affecting a tax year starting, let's say, January of this year, right? So 2026 going forward, where we haven't sort of invested that time and energy in programming. Because it does come down to, just where our attention needs to focus. This is a credit, that is a couple of hundred people strong, I would assume. I don't have the numbers. It just gets really hard for us to go back to prior years and make changes for such a small population. Like I said at the beginning, when we're dealing with 3.4 million individual taxpayers that work with us on a yearly basis, not even, mentioning the 40 to 50 million in sales tax returns that we get per year. So I think what we need to do is use 2024 and 2025 as a jumping off point to make changes based on our experience to make 2026 going forward better for everybody, right? I can tell you that, it does us no good to create work, not only for the taxpayer, but for us, right? Because we're creating work for us by the process that we have in place too. And so there's incentive for us to fix it. But I think fixing it in 2026 going forward is the best thing for us to do, just from our limited resources standpoint and the population. If this were 500,000 people, I'd say absolutely we would do something, this year to try to correct it. But it's just not, unfortunately, big enough from a volume perspective, looking at the system, to push us in that direction. So the good news is I think we have time. We have between now and probably July or August before we really start to finalize what the programming would look like for the current tax year, 2026. So let's take that time to come up with a solution that works for everybody and commit to making it better going forward.
Totally understand your concerns about the scope. I was just trying to understand more so how the automation would work with these single filers. I will note, in kind of developing the solution for the 2026 returns, all of us technical assistance providers are only funded through 2026. So recipients of the 2026 tax credit will kind of be navigating this situation largely without our assistance. And so kind of it will be helpful, I think, to keep that in mind when designing however the system's going to work, and more so communicating that to the eventual tax credit recipients.
Yeah, I appreciate that. And I'll just say, like, our goal here is to make this as seamless as possible, right? And I know we all share that goal, which is why we're having this meeting. So, like I said, from a customer experience perspective, which is something that we do focus on, we want this just to, the experience should be filing your return and then, getting your refund however many weeks later. It shouldn't have to require these other additional steps that we're forcing people to go through, inadvertently forcing people to go through for the 2024 and 2025 tax year.
Thanks for these questions, Hunter, and your responses, Eric. Eric, to your point, using 2024 and 2025 as years where we've learned, is it possible for the Department of Revenue to kind of aggregate data from everyone who's received a tax credit or applied saying they were owed this tax credit, and look back and see? My fear is that it's more than just these disregarded entity LLC business types that are receiving the denial letter, and there might be other business types that we need to drill down and ask another question that we can then include on their certificate to make everything go smoothly. I'm wondering if it's possible to kind of aggregate that data and take a look at, like, okay, which of our tax credit recipients were able to just breeze through this process, and which ones received denial letters, and are there still some who haven't received their credit yet, despite getting the denial letter and following up on those instructions?
So I think we can look at the data. It'll be aggregated, obviously, for disclosure purposes. But my understanding is, talking to our processing teams, is that it's really anytime there's a mismatch between what's been certified and the entity claiming it, the person or entity claiming it, is when we have this issue, right? And I think that's probably going to be close to 100% if I'm understanding how these are set up, or how these entities are set up and who's claiming it, right? So if it's a disregarded entity or a partnership, that's where we need to figure out how to reflect that on either the certificate, or look at overhauling processes in the department to maybe key more not on the certificate but on the certificate and the K1s, for example, or the 106Ks that are submitted.
Okay. And when would be, I know you guys are probably about to enter the busiest time of the year. When's a good time for us to sort of put a meeting on the books?
Yeah, I would say now. I mean,
Okay.
it's busy. I mean, the thing about taxes at the Department of Revenue, every day is tax day, right? Because we do get returns every single day.
Okay.
We are starting to ramp up. Obviously, we're starting to hit our busy season for income tax. But believe it or not, we are actually, I would say, probably about a month to 6 weeks away from starting to look at the 2026 tax forms and processes. So right now is the time to have these conversations, right?
Okay.
It just takes us time to get the requirements down and then start working with our programming team to get those in. It is a 9-month, 12-month process, believe it or not.
Yeah, I do believe it. Okay, thanks for that. Who else has got a question?
Mickey, I'm not sure if we got to everything in the chat. I feel like maybe, but
I see some comments in there.
yeah, I'm not sure there was questions. There was more comments, so I'll keep trying to read through.
Okay, well, we can read out Jay's comments and Chelsea's comments. So Jay says, if there are now 80 tax credits available in the state, maybe it would be worth creating a new job within DOR to handle these with more consideration rather than leaving it to software. What are your comments on that, you guys?
My comment is, I think that would be great. We have to realize that we are a general fund agency, and general fund dollars are very hard to come by. And I think we can make this work with processing and with automation. We just have to be a little, we given what we've learned, we just have to be a little bit more considerate of some of these nuances, right? Because the problem there's benefit to automation. The problem with it is if it doesn't equal it exactly, then we get these issues, right? So we just have to expand the variables that it's looking at. But honestly, we have 45 to 50 people who are looking at all the income tax structure for individuals, corporations, partnerships, and our severance taxes. And so the team is it's threadbare to begin with. And it is very hard for us to convey to the General Assembly that the next general fund dollar that they spend is going to be on the Department of Revenue versus the Department of Education or higher education or whatever it might be.
Thanks, Eric.
I had one more question. Sorry, I'm on my phone, so I'm not writing it into the chat. Is there a way, just kind of circling back to Monique's comment, which I think is helpful, is what to do when you get that denial letter? Is there some sort of way that maybe between CDA and DOR, there could be some sort of little list of if you get a denial and you need to call up DOR or you need to investigate further, what kind of information do you need to bring to that conversation? What kind of forms, what kind of information based on that denial?
Yeah, right.
Just thinking of that kind of the onus is on the business owner at that point to get this sorted out. So I'm just trying to think of how we can reduce that opportunity cost on them. That when
Sure.
they go into that situation, they've got their stack of stuff ready to roll. If they can get that person who's run thin already, how we can make that more effective. Is there something like that would be an option?
I think the best thing to do right now is to make sure that the K1 or 106K is handy because we are allowing these once we get that documentation, as I understand it. But if you're hearing difficulties with that process, let us know and we can investigate. But from what I've seen right now, that's how we are resolving this.
And just, Carly, I don't know if you've seen one of these denial letters, but the ones I've seen have a pretty clear numerated list of the things that need to be the steps that need to be taken. Yeah, does anyone have feedback for these folks at DOR about the clarity of those steps in the denial letter? Those of you that have seen many.
One of the challenges is that they send in the documentation and then there's no response. Like I'm on month 6, maybe now month 7. What are we, January? Yeah, month 7 on a response that has been submitted, but the entity has not heard anything back. And so if that's the timeline, then maybe we can establish as a group when we go back to the businesses to say the Department of Revenue is working on a timeline between blank and blank days for a response on any additional information you submit.
Yeah,
But
I'd
basically
say
in mind, it's like we sent it, nothing happened. This was a waste of my time.
that feels like an outlier to me. So if you wouldn't mind just following up with me separately, maybe just giving me that documentation, we can see what's going on. Because they will work, the teams that are working these will work them in the order received. And like I said, that 40 to 50 people is working these plus, the 80 credits that Josh has mentioned, plus, others that are pre-existing. So there can be a backlog, but that seems extreme and something's happening in the process.
Yeah, I haven't seen any of those denial letters in their entirety, but folks I've talked to have said that they've sent it in, but then have had to kind of keep calling or keep sending follow-ups of please, 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 when is this? Can I get some answer? So Monique, that does sound longer than the stuff I've dealt with, but yeah.
I
Okay.
think it would be really helpful if DOR could possibly like Chelsea says, like create a little information tree of like this is the best way to apply for all these different entities to make sure you receive the tax credit. Because we've all been in the dark, like even making, CDA doesn't know what we have been, we're supposed to do to make this go smoothly for these people that actually are getting this credit from one department. It's just such a weird thing. And so I think that there really should be some, I don't know, a series of YouTube videos or, information. So we are just educated well enough. And, whether it's us or the people applying for the tax credit themselves, can really do it all right, to not get hung up in this.
I appreciate that. I think my hope is that by working in this group together over the next couple of months, that we create the process that is seamless enough where we don't have to do additional content. And like I said, our goal here is to make this easy, right? And it sounds like there's enough to get there. We just have to spend a little bit of time on the nuances and then commit to making the changes on our end.
There's a couple questions in the chat. I'll go ahead and read them out. Lauren asked, what is a typical turnaround time if 6 months is an outlier? And then she said, after following up on a denial letter. Excuse me.
Yeah, it really depends on the time of year. Like, you can probably imagine from May through June or July, our inventory of work right now, when I look at it, or this team is like they're getting things in a week and getting out in a week. That will change, as we get later in the calendar year. We get a huge, surge in late March through April and even May as we are processing the paper returns that come in. And our inventory will increase to, 3 or 4 months worth of work. And then it shrinks. And then come October and the extension filing season, it will grow again. And then it shrinks, right? So like right now we are basically a week in, week out. But it really does depend on the time of year.
Thank you. Chelsea had kind of a clarifying question in here. What does it mean to, this is in quotes, make sure the K1 and 106K is handy? Do they need to send them into the DOR or just have them on file ready?
Yeah, I would say make sure you have them ready because like I said, if those are sent in with a return and this is an automated check, our system, first of all, cannot read what an attachment is, right? And it's not programmed to even look for that. So, I think for this year, until we get to this time next year, it just, once we get these denial letters, the response should include the K1 or the 106K, and then we can clear those out.
All right, and the last one I'm seeing, and maybe I missed this, but Barbara a little bit ago asked, or maybe just stated the question, I thought they need to use the name on the Secretary of State. And I'm guessing, Barbara, that you mean in terms of filing with the CDA form?
Well, yeah, because if
Flying. Yeah, go ahead, Barb.
your personal name and not the business name, I thought they were told whatever name is in the Secretary of State, and it wasn't supposed to be well, there was some conversation about whether if you put your individual name for the Secretary of State, you're supposed to be a business, right? So I'm confused.
I am too, Barb. So yeah, I don't
What do you have a
know.
business for then? If it,
Right. So from what we've been told is the legislation gives CDA the authority to issue tax credits to businesses. So our certification step that you are a legitimate business in the state of Colorado is to look you up in the Secretary of State. So yeah, I think we want to get some clarity on, is it fine to identify that business, certify that they are an eligible, legitimate entity, issue the certificate to them, but yeah,
why doesn't the tax credit go to the business, and then the business works with the individual to do their individual taxes?
So let me jump in. Let me just jump in here and say that there's lots of different kinds of business entities, and each of them works a little bit differently under the state and federal income tax code, right? And that's ultimately the issue that we need to address here. But what we were talking about earlier is a particular type of entity that's called a disregarded entity. And in that case, although there's a separate legal entity, an LLC, that operates separate from its owner for a lot of legal reasons, under the income tax code, we disregard that entity. We don't regard it as separate from its owner. And so that's one type of business entity that we need to deal with, where those owners are not filing separate tax returns for that LLC. They're just including the income from that LLC on their federal Schedule C. That's pretty common for what they call single member LLCs, right? It's just rather than operating as a sole proprietor, I, Josh Pence, set up an LLC that I own entirely, and that gives me some legal protections in some contexts. But from an income tax perspective, it's just as if I was operating as a sole proprietor. Whether they should have done it that way, that's for the Congress and the IRS to decide. But they wanted to offer that option, and they did. And now we're going to have to figure out how that option fits in with this particular credit. And we have this challenge with some others. Partnerships. There's lots of different kinds of partnerships. S corporations is another one that passes through. So there's just lots of different types of business entities through which you can operate a business. And we just need to make sure that we've accounted for all of those here. And it seems like we haven't accounted for them all. And so let's work on that now.
Yeah, so if somebody bought $20,000 cooler thinking they were going to get a tax credit because of this business entity thing, they're not going to get the money.
Well, I don't think it's that they're not going to get the money. I think it's that for the time being, there's some hoops to jump through that we need to iron out. And so, I think once we get the protest with the documentation that shows, oh, this was a disregarded entity, or, oh, this was a partnership that passed this through on a K-1, we can get them that credit. Unfortunately, it's more work at the moment for us and for them. And that's what we're going to try to solve for.
Oh, thank you so much.
You bet.
Thanks for that question, Barbara. Jay, do you want to ask your question? Or you want me to read it?
Yeah, I can ask it. So, like we've kind of learned through our like Monique's experience that, LLCs and partnerships can be problematic. It's not been straightforward. And I'm curious, what other types of entities do we need to be aware of that could also be problematic in receiving these tax credits? Because like Barb said, people are spending tens of thousands of dollars they may not have had because they got a letter from CDA saying that equipment was eligible. And I just really want to know, who we should be cautious of, and let them know ahead of time, hey, this could get hung up. You might be dealing with the Department of Revenue for a year working this out.
Well, I mean, let me start by saying that we're not going to give anybody advice about what particular business structure they should or shouldn't use. I wouldn't structure a business around a particular tax credit, but that's not really advice for us to give. I mean, I think to Eric's earlier point that any case where the person or entity earning the credit is not the person that's going to claim it on their return, those are the cases that we need to connect the dots a little bit better on. And so I think for the most part, that's going to be disregarded entities and pass-through entities. Somebody mentioned co-ops. I think, there's some potential for for depending on how they're taxed under the code, there's some potential there, but generally they should claim those on their own. So I'm guessing that it's just pass-through entities, S corps, partnerships, and then disregarded entities that we need to work on.
Okay, thanks. And then my other question is, for the folks that have gotten denial letters, like what is the recourse? Like, is it possible to still get this credit even if it takes a while and a lot of back and forth, or is it like, nope, this happened in 2024,
No,
and I just want to make sure that, we can advise, or, I don't know, reassure folks that, hey, yeah, sorry you got this letter, but if you keep at it, it will eventually come through, rather than them freaking out thinking that there is nothing to be done.
yeah, I think that from a messaging standpoint, I would say, we get the information, we will take action and grant the credit and issue the refund. My only caveat with that is that if one gets a letter from the Department of Revenue, and they decide to sit on it or not take action on it for 3 months, there is a period at which after we will not be able to take action on it, right? Because this represents a denial, and that comes with specific statutory language and requirements on our side, right? So if the action isn't taken within 30 days of that, or at least some type of outreach to us within that time period, that's the important piece, right? So we ask that attention be paid to it. We will get to it. Our job is not to deny credits. Our job is to make sure that people who are eligible for credits get them. In this case, there's going to be a couple of extra steps until we iron this out. But our interest is in making sure that people who are eligible for these get these. Absolutely.
Thanks, Eric.
I have a question on that. So in some cases, folks are receiving the denial and it's changing their tax burden. And it is indicating that they, in fact, owe the Department of Revenue money back.
Yeah, that's just an accounting feature. So it will look at all, your taxable income plus whatever credits that you have. And in this case, this is a refundable credit. It will take, let's say if you would have owed $1,000, but for this tax credit, now you get a refund, right? So the denial letter will take that. It's basically accounting for not providing that credit and showing what the tax would have been, without claiming it. And then once that documentation is provided to us, it will go back to what that refund looks
And so
like.
when one of our recipients gets a denial letter, is it safe to say, hey, hang back before writing that check. Let's respond to the denial first.
Yes. Yep. Absolutely.
Okay.
Yep. Respond to that. Again, it's probably going to say, you need to essentially protest with us within 30 days. And that's the key, right? Well, as soon as we get that documentation, that protects the person or entity, and essentially lays claim to that credit. And then when we get to looking at that in our system, we will say, this was received in 20 days, therefore we can handle it. If it was received, 6 months after the fact, it's something that we can't really budge on, right? We're not given that statutory flexibility.
Got it. That's really helpful for us as TA providers to hear, that there is that time window, there has to be expediency, there's a path for response. It's beyond just someone sitting on it, like it's a requirement based on the law that if they want to protest, they have to respond within that 30 days. I don't think any of us had that information prior to you just saying that. Cool. One thing, Mickey, you may have mentioned this, I don't know, but I have been very curious on the amount of tax credits that have been awarded versus the amount of tax credits that have been applied. And I don't know if on your end it's easy within the automated system to just determine the amount of tax credits of this program that have been actually applied. I would just love to see our difference between what's been awarded and what's been utilized.
I know we just released our annual report for 2024, and I cannot tell you if this tax credit at that level of detail is included in it. But that's a good resource to have. We also do publish something called the Tax Profile and Expenditure Report. That came out, I want to say in 2024, late 2024. It's every 2 years, and we are actually starting to work on it for the current period, and so that will be released later this year, I believe. And that is a much more detailed accounting of the tax credits that are offered and then claimed.
Just a question to the group here. I am familiar with two businesses, and again, these businesses are not required to report back on how their filing goes, but I do know of two businesses that never got a denial letter, just got the credit. It worked seamlessly. I know of a large number, I would say maybe 40% of the folks that we've issued credits to have come back to us saying they got the denial letter, but everyone who I followed back up with said that once they followed the steps of the denial letter, they did wind up getting the credit. And this is just a ballpark figure. So, yeah, I'm curious. Does anyone know? It sounds like, I mean, we've heard from Monique that there are folks who are still in this process, got the denial letter, reported, followed the steps in the denial letter, have heard nothing back. But yeah, has anyone worked with anyone where this went smoothly or worked with someone through the denial letter process and yeah, it worked out?
I worked with one guy, and yes, got the denial. I think it was similar with this situation of it was kind of two different entities. It was a disregarded entity slash he had gone through a name change and a move that year. And so it was like a DBA slash name change issue that really is pretty much just an error on the back end that could have been dealt with. And he got his funding back. He got pushed through, but it did take a while and he did need to. He said that the best way he did it was he just kept calling like over and over and over again. Just to, because he's like, well, I'm probably at the bottom of a stack of papers, right? Like you were saying, right? Is this comes in and they get dealt with as people can get to them. And he said he just had to keep kind of badgering, and then it worked out. But that still delayed him, 4 months, I think, was the total, and ish. And that kind of, I mean, it just, he wasn't mad about it because he was like, okay, I just dealt with it. It's probably an issue on my end. But also I had, loans taken out to pay for some of this stuff, and that added that amount of interest when I didn't think I needed that. And Monique, kind of like you were saying, is 6 months down the line and you've already bought the stuff. That can be hard. So you did end up paying more on that interest on those things, but it was sorted out.
Thanks.
Would it help?
Go ahead.
But just would it help if I kind of got just a written down or some examples of what happened with him and share that if I got some, if I got permission from him to share that? Or is that something that we can't really touch?
I mean, I think
Well, I
if you
guess
get permission from him to share with us, that's fine. I mean, that will allow us to look at the process in that instance, to see what was going on. So yeah, we're always willing to look at those things.
Okay, great. Yeah, that's awesome. I can reach out to him and see if that would help kind of the process sorting as we move along.
we also have a recording from a consortium meeting where we had tax credit recipients talk about their experience, and a lot of them did talk about, yeah, what the process was like for them. Happy to share that with you guys at DOR if that would be helpful to you. One thing I do want to ask, because, we've got all of the folks on this call in a position where they are providing technical assistance. Do you, Eric and Josh, have advice for these technical assistance providers on, where they can help with this tax filing process and following up on the denial letter piece, and where they may be getting into trouble with providing tax advice, and where they should really say, for in your best interest and mine, let's bring in a CPA?
So I don't I don't think that there should be a need for them to bring in a CPA just to respond to a denial letter. That should be, fairly straightforward. You can even do it on our website. Just submit the protest with the certificate and the K1 or whatever documentation you have to show that moving through an entity or that the entity is disregarded. In terms of providing advice, the state doesn't regulate, the department doesn't regulate practice in the same way that the IRS does, and so we don't have a lot of rules about who can and can't provide advice and what that advice needs to be. I mean, as long as folks are staying on the side of, obviously it's problematic under the statute to help people willfully evade the tax or willfully falsify a return, but that's not what's happening here. And so, I think in terms of just navigating folks through the process, I mean, obviously, I don't know how comfortable you're going to be helping them complete the return. That's probably something that you're going to want to consult a tax professional on. But just in terms of navigating through, which forms they're going to need to file to claim this, how to respond to a rejection letter, that should not be problematic.
Okay. So action items here for us. Yeah, we will meet with Department of Revenue and talk about what other questions we can be asking on our application to kind of take one more step in reducing the chances that someone gets a denial letter, and talk about what we can include on the certificate that will support with this. So yeah, Eric and Josh, look for an email from me and my team this week to set something up for the coming weeks. Do we have any other questions while we have Eric and Josh on the call?
We at some point one of us like advised another one of us to like if you've got a denial letter and you've like called the Department of Revenue and it's really hard, like the better thing would be to like go find an office and walk in the door. And I'm just wondering if you have any suggestions like that, just, so things don't get like lost in some email shoot or some voicemail thing. Is it like going to be helpful if we just go talk to a person face to face?
We have 5 offices in the state, Fort Collins, Denver, Colorado Springs, Pueblo, and Grand Junction. We also do, on occasion, partner with the Department of Motor Vehicles, and we'll send our tax teams out in conjunction with the DMV to go schedule. And so we've been to places like William Park, Canyon City, and things like that in the past. There's a schedule up on our website that will show where we will be on that. In terms of calling, I mean, I think one of the things that I will tell you, and this probably will not come as a surprise given what I said about getting additional resources, we have a lot of calls coming into the call center. We get about 500 to 750,000 calls per year. When we are fully staffed, we can answer 250,000 calls. And so it is, it's something that if people want to try to reach out to us, they can. It's better, obviously, to do that and find a way to talk with us rather than doing nothing, given that 30-day clock that I mentioned. But we always suggest people upload that information into Revenue Online, and that will create a trigger for us to go in and look at what's going on. And so, rather than, if the instructions are clear, and I'm hearing they are, and I'm glad to hear that they are, that's what we endeavor to do, to upload that information into Revenue Online, and we will, be able to take action on it when we get to it.
Okay, thanks.
Anything else that you wish taxpayers would know?
There are many things that we wish taxpayers would know, but I will tell you with regard to this, I think, like I said, I mean, really, this is a partnership, and I think we owe it to, this community to create a process that works for them. And, I think we just need to work on it, and until next year, just set the stage that it's going to be another year that's going to feel a little bumpy, but our goal is to make sure that it's a smooth process starting with the 2026 tax year.
Cool. Thanks, Eric.
Thank you very much to both of you for coming in, listening to us, and getting a sense of what we're dealing with here on the ground. I think even just being able to say this to the folks that I've worked with, that we had an actual meeting with folks who are responsible for helping administer the program, is going to go a long way, because I think they feel like they're just off in a vacuum and no one cares. But so thank you for taking time to chat with us and hear what we're up to and get some ideas on how to resolve it. Really appreciate it.
We really appreciate the invitation and look forward to continuing to work together to make this a good process.
Awesome. Well, hope you guys enjoy the rest of your Wednesday, and we'll be in touch with some follow-ups. Thanks again.
Thank you.
Thank you.
All right.
Thank you. It was awesome.
Okay, guys. Thank you for that. That was really great that you all came up with this idea to invite them. I think that was incredibly worthwhile. I was surprised at how quickly they said, yes, we'd love to come. And I'm really pleased to hear that they're hearing us, and there is, this acknowledgement that this program isn't working on the tax filing side. So I'm encouraged by that. But what did you guys think?
That was very, oh, sorry, go ahead, Chelsea.
Oh, I was going to say, I think my biggest takeaway was just, from our perspective, making sure we're very clear and communicative with recipients of the tax credit, indicating that they are likely to receive the denial letter, and to consistently follow up with that within the 30-day timeline, and that it does not mean that they won't receive their tax credit as long as they follow through. And that because I trust that Mickey and CDA folks will meet with the DR representatives to try to iron out the process. But as Hunter pointed out, it doesn't sound like those changes are going to go into effect in a timeline that will affect the technical assistance. So that was my biggest takeaway.
Yeah, like almost giving folks a heads up, like you may get this denial letter. It doesn't mean you're denied. Which, can feel confusing. Any other thoughts, Angela?
Yeah, I know it was kind of asked, and I didn't feel like I got a super clear answer. um, but just, I think it would be really worthwhile to do some sort of audit and see how many of these, how many have been given out, how many have actually been reimbursed,
Yeah.
just like figuring out what percentages is actually working, and just so you actually have that data, because I feel like you might have to go up the chain and say this program isn't working and we've only had 20% of our our things like reimbursed, something like that. And I don't know if that's something you can do or if it has to be something DOR does, but I do think it would be really worthwhile.
Yeah. And unfortunately, I think it's even bigger than any state agency. I mean, you heard them. We've got 8. They went from 40 tax credit programs to 80. I know we've talked about how, yeah, I mean, with our taxpayer bill of rights and with our state budget situation, tax credits are the main way to do any kind of programming, issue a credit before uh before that Tabor surplus that comes out of that Tabor surplus. Um, right. So, if tax credits are the main way Colorado, you know, promotes its priorities, then, we probably need to smooth this out for everyone involved, the applicant, the agencies issuing the credit, and uh DOR, right? This is a lot of work for them. Jay.
Yeah, I'm wondering if CDA can put something on their site that is like, if you get a denial letter, do this.
We
Especially
do, yeah, we
as
put that in when we send the certificate, we have a blurb that says, if you get a denial letter, here's what. And we started doing
okay.
that last year.
And is it like is it this match up with what these guys just told you?
Yeah,
Okay.
exactly. And the
Just
denial letter does say exactly what needs to happen and that you have to do it within 30 days. It's just, it doesn't give this reassurance of it's likely you'll get it if you just wait 6 months. If you follow these steps and wait 6 months, like it's likely this will happen. And I think that's where, I mean, I definitely know of at least 2 businesses who received that denial letter and just didn't read the full letter all the way through and saw a denial and said, guess I didn't get it, and missed that 30-day window.
and I just say that especially as we aren't going to be doing the TA anymore,
Mhm,
or, at the end
mhm.
of the year. Like, I just think it should be really, clearly stated in like big red letters. Please respond to the DOR in 30 days. And
Yeah,
I don't know, just, yeah,
I'll see if we are able to put it on the website.
I think
Yeah.
people need to think about their cash flow too in terms of being a business. So realizing that if you are applying for, this tax credit, it is going to affect your cash flow if you buy the item. So
Mhm,
the expectation, I think, in your own accounting and again, management of your company is that, well, I might not get this when I think I'm going to get it. So, like you said, somebody got extra interest or whatever. So, if you're going to apply for it, there might be, there's a timeline because they have so many people to help that include in your cash flow that this could be delayed.
mhm,
Include in your management planning that it might be delayed because of
mhm,
some processing issues. Because if they think it's all going to just be smooth and dandy, then they're going to have more pain than if they think, well, there could be delays in trying to do interpretations or, counting issues or whatever. So if you
mhm,
have wisdom and you think, well, I might have to, work through this, then it'll just be less painful.
mhm. Yeah, you, that's it exactly, especially with folks trying to buy their piece of equipment as late in the year as possible, demonstrate an impact, and then turn around and file their taxes as soon as they can. Yeah, that whole plan can go awry if they get a denial letter that then takes 6+ months to respond to. Carly.
Is there, I totally agree, but of making it clear of this is the, like, what did you say, Mickey, that 40% of people had gotten denial letters?
I regret saying a figure. I wanted to give them a sense.
Well,
I don't, that's not a real, that's my guesstimate in my mind. But
okay.
to me, with the number of emails I've received from the number of applicants we've issued, it feels like 40%. I can go back and get us a better number, but I definitely wanted to express that while Eric and Josh were there. I think they had the impression that this is happening with that the 100% of the applicants are getting the denial letter. So, and again, not everybody who gets the certificate is emailing me and saying, hey, what's this denial letter about? But yeah.
Is that something where, that's kind of my question, is like somebody had mentioned of doing some kind of little audit to get some real info from at least like last year.
Mhm.
And then maybe if we have that, I don't know if this is opening up a can of worms, but to do a consortium meeting where literally the call for that is, have you gotten, everybody who's gotten denial letters come in and talk to us about the process. Is that opening up a can of worms, or is that something that I think could be helpful for
Carly, did
developing
you
these processes
attend,
to
did you
smooth things
watch the recording from the December consortium meeting? Because that was most of what people
That was
talked
most of
about.
it. Okay, because I haven't seen that one, and that's what I
Okay.
was thinking is like, but that wasn't a specific call for people who had denials.
It
That
was a
just kind of,
call specifically for people who got tax credits, most of which got denials.
oh, okay. So there is some information there. All right.
Yeah, take a look at that consortium
Okay.
recording.
That would help. Okay.
Yeah. Thanks. Perdita.
Sorry. Can I just follow up quickly on
Oh, yeah.
that question? I threw a link in the chat where where Department of Revenue is tracking all of the tax credits that have been awarded, but they only have documentation through 2023. And that 2023 report was updated January 2026. So it might be some time or they get the numbers pulled together. But it looks like they are tracking them. It's just going to be on their timeline. Didn't seem like Eric was too eager to go and find those numbers for us on this program, and I get that. But they are tracking it. We'll get it eventually, just not anytime soon. And that link is in the chat. It's a Google Drive link.
And yeah, we can put that into our agenda too. Maybe I read it differently, but I feel like he's willing to pull an aggregated report so that we can take a look. I mean, it's necessary for us to figure out what other questions CDA needs to be asking, right? So I am going to push him on that. And I'll keep you guys posted if we can get something sooner than, what would that be, 2028 on this? Perdita, go ahead.
Okay, so I want to say this was a fantastic meeting. All of you guys who asked questions they were wonderful questions that provided, I think, incredible conversation that was really useful and helpful for all of us. And also at the same time, I want to say that, one of the things, especially around this idea of the disregarded entities, is, it's a glitch in the software, right? That's causing this. And so, part of me is also like, is there a way that we can, is there a way to continue to have conversation with DOR to be diligent about any of those things coming up? Because this could have been, we could have known this previously.
Well, people that have used like tax consultants, they have a tax person. So the tax person should know what this what's it called?
Disregarded entity.
Disregarded entity.
So the tax people should know this LLC disregarded entity thing if they're in taxes. So how many people in our team have had somebody that had a tax consultant that said, "Oh, you're a disregarded entity LLC, so you need to do da da da." I mean, I would think they would know what this is.
Unfortunately, that's just not happening. We've been hearing from a lot of people that they've worked with their CPA and still encountered this. Yeah,
That's an interesting conversation because
yeah.
they all went to school. They have a certificate, some of them, to be, a tax
Yeah.
person. And so you can't just blame the Department of Revenue on that. If you're supposed to be consulting somebody, then how come you don't know what that is? So
Yeah. But I mean, they openly admitted to, things are getting stuck at this automation step, right? So, it seems like they are committed to fixing that, but yes, Perdita, I agree with you. They didn't come to us saying, "Hey, every one of your tax credit recipients."
Exactly.
Yeah, yeah.
Yeah, I think being certified as a CPA doesn't necessarily mean you understand what automations the DOR has in place, like to know that, everyone who files as a disregarded entity will just be automatically sent this rejection letter. I mean, I don't know. I don't know the specifics. But yeah, it sounds like it's an issue that they need to address at DOR. And
Yeah.
it doesn't sound like it's going to happen for at least a year. That was what I took away from that.
Yeah. Well, it sounds like action will be taken soon that won't go into effect until next year. Yeah. Got a lot of questions and comments. Let's do them. I have a few updates, but they can be quick. Jay, go for it.
You had just said that there was information on the website about what to do if you get a denial letter, and I cannot find it.
It's not on the website. It's sent in the email that they get when they get their certificate, and it's big and bold.
I see.
So,
because it's
yeah.
not helpful to me as a TA provider who doesn't see that.
Okay.
I'm
So,
looking at the website for like, what do I do? And
yeah.
I just would love that posted clearer for people.
Sure. Yeah, I will ask if we're allowed to do that, but in the direct communications, which like Aeva, she's cited as the person who can be copied, she gets that email as well. So it may just be that you haven't, been the copied entity there, but yeah, that's language we've been including. Yeah, once we found out that a lot of people were getting these denial letters. Hunter, did you have a comment?
Just, it sort of seems like you might be doing this already, but can you try to find out like what percentage of folks have been denied? And if I was kind of with Monique and it seemed like the Department of Revenue was not planning to give us that information until
yeah.
like, I don't know, 2029, whenever that data comes out. And so I just wanted to encourage CDA really to reach out to the sponsors of the legislation. Because like the Department of Revenue's folks said, this is happening in a lot of different situations. And I think it would be really valuable for the legislators to know that it's happening. And then sometimes they can just like leverage a little more gusto from the Department of Revenue to get it fixed.
Yeah. Yeah, 100% agree. Okay. I'm just going to give our quickie little updates here. So just want to say a humongous thank you to everyone who supported someone applying in the December cycle. It has been the biggest one yet. It's going really smoothly too. There aren't like major issues or concerns. They're kind of like the regular run of the mill things. So, huge deal. We're really excited about this. We are also, very busy processing all of them. We have updated your grantee spreadsheet. So that should be up to date. We are so close to being done with grantee spending. We probably won't be totally done till April now that we have a clearer picture of how long things will take, but this is coming along. We're now sort of more in this phase where it would be really helpful if you guys see that someone's been sent the grant impact report, if you could nudge them to fill it out. And again, thank you to everyone who attended that consortium meeting. The recording is coming out in a newsletter soon. So if you missed it, you can watch it. And another big thing, I'm not going to be around for the first 2 weeks of February. The review is still going on. Our team is still working away, but unfortunately, I will not be responding to your emails until after the President's Day holiday. So heads up about that. Okay, those were our updates. Any questions about those? And responding to the chat, you're very welcome for setting this up, but really all credit goes to you guys for asking that we reach out. So goes to show, can't hurt to ask.
Also, shout out to you, Monique. I had not even had any recipients reach out to me with these problems, but it is definitely something I will be checking in on folks about. So thank you for really raising the issue and leading the charge on getting this fixed.
Yeah, great work, Monique. Yeah, and great work, everyone. The power of this group is strong. So thank you all for the work you do, the issues you raise, and the feedback you give to your government agencies. It's very, very important. All right, cool. All right, have a great rest of your day, everyone. Thanks again.
Thanks, everybody.
Gracias, gracias, Diego.
Adiós, gracias.